So solid quarter. You guys raised guidance. Paying users, they continue to grow, but paying users still a fraction, less than 3% of your 700 million registered users. And that's been a pretty consistent ratio over the years. Is that one that investors should expect to continue, or can you sort of convert more of those free users to paid ones?
Well, the fact that we have such a large base of free users is a big opportunity, and we're doing a lot of things to continue to offer more to our customers, including, well, we've made a lot of progress. We had a great quarter, a profitable quarter, we're building positive momentum across the business. And the shift to distributed work has opened up even more opportunity for us. So work from home has accelerated several trends that we're well positioned to address, and we're seeing it's been great. We're seeing the rise of the freelance economy, spikes in rich media and video content, more businesses shifting to cloud. So a lot of positive momentum.
Yeah, I want to talk about that, the rise of the freelancer economy, because over the years, you guys have moved deeper into the enterprise space, but of course, really started as a consumer product and still has some of those great qualities. So can you capitalize on that muscle, or are you to take advantage of the freelancer and the creator economy that we're talking about more and more here on CNBC? And do they pay, I guess? That's a good question, too.
Yeah, well, it plays to our strengths. And actually, our consumer roots have been a big advantage because we can reach this big audience, we can acquire these customers profitably, and we've seen a lot of increased usage. So it's been great for the last year has been great for HelloSign. E-signature requests are up over 75% since the start of the pandemic. And then for the creator economy, we've seen a 30% increase in our Pro SKU. So these are folks that are sharing video, doing new workflows there, starting their own businesses. So we're really well positioned because we can reach, having hundreds of millions of registered users means that we can reach those customers cheaply. And in a lot of ways, we're applying the consumer internet playbook to business software.
Right, and some of
Drew,
those
for larger customers,
platforms. Go ahead, Carl. Okay, I will take it. I was just going to say that perhaps as you see creators find different ways to monetize, that could trickle through to what you guys see as well. But you did mention that move to remote work, and Dropbox has really been a company that embraced it early and sort of fully. But it does stand in stark contrast to what we've heard from some other CEOs like JP Morgan's Jamie Dimon earlier this week. He said he's fed up with Zoom, with remote work, and he thinks that commuting to offices will make a comeback. What do you think he's getting wrong here?
Well, I think different companies are going to choose different models, right? We're excited for things to open up. We're rolling out a model we're calling virtual first, and we're really leaning into this because, I agree with JP Morgan CEO. I think there's a lot of room for improvement in the experience of remote work, but it also has a lot of benefits. And when you talk to employees, they really appreciate a lot of the flexibility. They don't want to go back to the way things were before. That said, we've all been in lockdown, and I think we all understand there's no substitute for the in-person experience, and we're looking forward to bringing that back. So we've been really thinking ahead about our model. So we call it virtual first. And basically the goal of virtual first is to get the best of the in-person and remote experience. And we're rethinking the office. So when focused and solo work happens at home, and then we're repurposing the office or reimagining it to be this collaborative convening space. And so you get the best of both worlds. So we're excited to get this rolled out more broadly. I think we're all looking forward to things opening up a little bit more.